Welcome to the Trade Setup section of the course. A setup is when price has provided all the prerequisites for considering a trade entry. Here we have a resistance, price is trending up and managed to close above the resistance. This is our setup. Price broke above the range. Now we wait for the next candle to form a bottom wick. We'll place a buy stop above the previous candle. This buy stop is our entry. Our stop loss will be at the low of the breakout candle. From this simple scenario, we can see that a setup and entry are two very different things. From time to time, we may find that the perfect setup has printed on the chart, but price still hasn't provided an entry. This is okay. As disciplined traders, we stick to our game plan and never attempt to force trades. We have four major setups that we look for: breakout, break and retest, range fill, wick fill. Let's take a look at all setups starting with breakout. Here we have an uptrend and price is in a range. This candle managed to close outside of the range. This is the start of a breakout setup. Price broke out of the range. Now we'll wait for the next candle to form a bottom wick. We'll place our buy stop above the high of the previous candle and our stop loss at the bottom of the breakout candle, looking for price to drive up to our take profit once our buy stop is activated. Here's a bearish example. This candle managed to close outside of the range and is the beginning of a breakout setup. Price broke out of the range. Now we'll wait for the next candle to form a top wick. Once this candle flips bearish, we'll place our sell stop below the low of the previous candle and our stop loss at the top of the breakout candle, looking for price to drive down to our take profit once our sell stop is activated. A breakout setup is the most common and simple setup traders will see on the charts. Break and retest. The break and retest is very similar to the breakout, but in this case, price will print an additional candle that respects the breakout candle before continuing the trend. Here we have a bullish candle that managed to close above the range. The following candle closed bearish but still above the range, respecting the breakout candle. We can expect the subsequent candle to create a bottom wick, and once it breaks the high of the bearish candle, it's safe to assume that it will keep driving up to our take profit. Here's the bearish example. Here we have a bearish candle that managed to close below the range. The following candle closed bullish but still below the range and respecting the breakout candle. We can expect the subsequent candle to create a top wick, and once it breaks the low of the bullish candle, our sell stop will be activated and we can expect price to continue driving down to our take profit. Range fill. The range fill setup often occurs after a fake out or false breakout. Here we have a range and price is in an uptrend. This bearish candle managed to break out and close below support opposite of the trend. The following candle closed bullish back inside of the range, complementing the trend and indicating a clear fake out. Once the next candle opens up and creates a lower wick, we'll place our buy stop above previous candle and our stop loss at the bottom of the fake out. Here's the bearish example. Here we have a range and price is in a downtrend. This bullish candle managed to break out and close above the resistance, opposite of the trend. The following candle closed bearish back inside of the range, complementing the trend and indicating a clear fake out. Once the next candle opens up and creates a upper wick, we'll place our sell stop below previous candle and our stop loss at the top of the fake out. Wick fill. The wick fill is a concept you learned about in the candle section of the course. This is how you identify it in a setup. We have price trending up in a range and it reversed at resistance to now test the bottom of the range. Once we get a bullish candle displaying that price has respected the support of the range, we'll wait for the following candle to form a bottom wick and place a buy stop above the bullish candle, anticipating price to fill the wick and hit our take profit at the top of the range. Here's a bearish example. We have price trending down in a range and it reversed that support to now test the top of the range. Once we get a bearish candle displaying that price has respected the resistance of the range, we'll wait for the following candle to form a top wick and place a sell stop below the bearish candle, anticipating price to fill the wick and hit our take profit at the bottom of the range. These are the most popular setups we use to be profitable price action traders. Just these 4 setups alone have made disciplined traders millions of dollars in the market, and now you too can reap the benefits. Be sure to really understand these setups and identify which market conditions present them in order to have an advantage on the charts. That wraps up the trade setup section. I'll catch you in the next section, Intro to Profit.